Hello, my name is Julie Ramsey, and welcome to Disability Insurance. Some key points of this session is the probationary period begins at the effective date of the policy. The elimination period is a deductible expressed in time rather than in dollars. So you go through the elimination period at time of claim. Own occupation means I can't do my own job. Any occupation means I can't do any job I've had training, education, or experience in. Let's get into the details. Disability income insurance. Why have it? It's designed to replace a portion of my income when I can't work because I am disabled and I want to provide for my family. Underwriting. It's based on occupational risk, and the riskier an occupation, the higher the premium. Now, benefits are limited in duration and by amount. You see, you can't have more insurance and it can't pay you more than you had when you were working, because that would encourage someone to become disabled so they could profit and make more money. So it can be reduced by existing insurance. Let's go through some definitions. The probationary period, we talked about that. When does that start? It begins when the policy goes into effect, right? Sicknesses are not covered during that probationary period. You see, the insurance company doesn't want someone to get sick, turn around, buy the policy, become disabled, and have to cover it. Accidents, however, are covered in the probationary period. Why? You can't plan a true accident. An elimination period is a deductible expressed in time, not dollars, right? So you'll wait through this time deductible when you become disabled. Now, the longer the elimination period, just like on your auto insurance, the higher the premium, right, or the higher the deductible, the lower the premium. It applies for each new disability. Now, the benefit period, right? So I become disabled, I wait through, I've paid my deductible, okay, that elimination period, I've waited through that time frame, and then I go through my benefit period. And it's simply, how long do you want to receive benefits? So you decide this when you buy the policy. Is it 2 years, 5 years, to age 65, whatever. That's determined when you buy the policy. Now what we want to do is we want to define disability. How do I know if I'm disabled? Well, it depends upon the definition that's found in the contract, all right? This first one is own occupation. This is the most generous. It's also the most expensive. Own occupation states this: if I can't do my own job, if I can't do my own occupation because of this disability, then I get my disability benefit. Well, what if I could do another job? Well, hey, go do another job, that's fine. But this policy will pay you that benefit when you can't do your own occupation due to that disability. Now, any occupation. This one is less generous, so it's also less expensive. And it says this: if I can't perform any occupation for which I've had training, education, or experience in, only then am I considered disabled. So maybe I can't do my job, right? But is there a job with my disability that I can do that I've had training, education, or experience in? So you see more folks coming back to work and their policy doesn't pay because this is more restrictive. Non-occupational and occupational. Non-occupational simply means not at work. So I have coverage when I'm not at work. If I have an occupational policy, that means I have coverage 24/7 regardless of where I'm at. Presumptive disability. Now that key word there is presumptive. When these things happen, we presume the insured to be disabled. Please note, this has nothing at all to do with can you do a job. When these things happen to you, we just presume that you're disabled. Well, what would those things be? When do they presume I'm going to be disabled? Well, those examples would be loss of limbs. Okay, say that you were in an accident and lost both arms, or the use of both arms or both legs, whatever. And permanent blindness. This has nothing at all to do with can you do a job. It's when these things happen, we presume you to be disabled. Partial disability. Now, first of all, you've been totally disabled. You're better, and now you're going back to work. But you're still partially disabled. You know, you can do some of the duties of your job, but not all of them. Or maybe the doctor says you can go back to work, but for the first 3 months, we only want you to work half days. And you think, well, gosh, if I go back to work, I'm missing out on income, my policy's not going to pay. What do I do? Well, partial disability states it pays a percentage of your benefits for a short term. And that would help until you can get ramped up, you're better, and then you can work on a full-time basis. Now, with residual disability, it's very similar. You're totally disabled, right? You've been off work, but now you're better. You're going back to work, but you're partially disabled. This also pays part of the benefit, but here's the difference. There are some disabilities where one gets better, but they're always going to have some sort of disability. Maybe they're confined to a wheelchair. And, you know, part of their job previously was making sales calls and going to clients' homes. And because of this disability, they can still work, but they can't make as much money as they once did due to the disability. So residual, think long-term. Partial disability that we talked about earlier, think short-term. But both are paying part. Recurrent disability. The insured becomes disabled. We know when the insured becomes disabled, the insured receives benefits. Now, the insured gets better, and the insured decides to go back to work. So the insured is happy, everything's great, the insured's feeling better, and benefits stop. Now, just a few days or a few short months of returning back to work, the insured has a relapse or a recurrent disability, which means the same thing that happened to them originally, say it was a heart attack, happened again, just within a short time of going back to work. When this happens, this recurrent disability kicks in, and it says there is no elimination period. You do not have to wait through another timed deductible, and you can get benefits immediately. So this will encourage me to go back to work, because if I have the same disability that happens again, I don't have to wait through that time deductible again. There's no elimination period. Benefits start right away. Pure loss of income pays a percentage of lost income. Now, we stated that you can't receive more disabled than you did when you were working. Well, typically with pure loss of income, it's usually capped at 60 to 80% of your earnings, and it's usually used with group disability. Group, typically you get that at work. There's another type of disability policy that could be set up, which is indemnity policy. Now, in this scenario, indemnity just means flat amount, and it's chosen by the insured at time of application. So this would be an individual policy. So we have a client that goes to the agent and says, I need a disability policy and I need X per month. Indemnity policy, they state what they want it for. Now granted, it can't be more, the benefit cannot be more than they made when they're working. Impairment rider. Typically when we hear the word rider, we think of adding coverage, right? It's more premium, we're making it better. That is true except for this one. Impairment rider excludes coverage for a specific ailment or condition. Let me give you an example. Let's say that I'm the agent and I'm visiting with a client, and this client has tons of back injuries, right? Had all kinds of surgeries, all kinds of back issues, and they want to know, can I get a disability policy? Well, I'll tell you what, let's take an application, I'll send it into the underwriters, and let's see what happens. The underwriters evaluate that risk, and they say this: the good news is we're going to write a policy on this client. The bad news is we've put an impairment rider on your back, and if you become disabled because of your back, that impairment rider, it won't pay. It won't pay the benefit. So the good news is the client can get coverage, right? Because if we weren't able to exclude this, his back, then he couldn't get coverage at all. To recap, the probationary period. When does it start? It starts at the effective date of the policy, when you buy it. The elimination period is a deductible expressed in time rather than dollars. Please pay special attention to the probationary period and elimination period, and don't get the two of those confused. Own occupation means I can't do my own job, so I'm considered disabled. Any occupation. I can't do any job. I've had training education, or experience in. Thanks for joining me today in Disability Insurance.